Good morning. Excuse me. Good morning, folks. Hope everybody's doing well. Hope everybody had a great weekend. Let's just go ahead and dig right in. So, we'll start with the yes as always. I guess before I jump ahead of myself, let's just take a quick look at the economic calendar for this week. That's not the right date. No. Alright. Looks like today we don't really have anything. Tomorrow, yeah, pretty much the same. We've got Thursday jobless claims, continuing jobless claims. And then CPI on Friday will be the big one this week. So not a ton coming at us as far as economic data this week. And let me just take a quick look at the earnings schedule. Big one this week, Cracker Barrel. Don't miss it. I love Cracker Barrel. It's yummy. I'm joking. There's not much going on this week. Maybe for you sycophants that want to play Neo or DocuSign, you can have some fun there. But not too much economic, not too much earnings this week. So let's dig right in. After that nice run up past the daily mean, we basically spent a week coming back and settling at it, bouncing at it, bouncing at it. And now we're starting to a new week and starting to try to head higher. Pre-market. So we've bounced at the daily mean, the 21. And on Friday, we didn't even need to touch the daily means. We held at 4101, setting higher lows every day. We are starting to push out of this wedge that we broke out of on Thursday just to fall back into on Friday with that annoying tweet from Musk and whatnot that kind of sent things down. Well, no surprise, everything came down, and calls for today this week landed at beast, and now we get this nice sizable gap up. Right now it's basically, I'm looking at kind of the highs that we hit during the cash session last week at like 41.75 and this 41.01 level. That's kind of the range we should be watching for this week. You can see my kind of four major key levels here: 41.65, 41.36, 41.01. The daily 8 is caught up above 41.01. The 21 still sits a hair below. But they're starting to step up now, right? We have kind of pushed a good amount before open. So I wouldn't be surprised for a little bit of profit taking and, attempt to fill the gap. But let's see if 41.36 can hold us up. If it doesn't, I just kind of foresee us coming back to fill the gap before heading higher. If we do go back to completely fill the gap and we start to lose 41.01 and 40.90, now that the daily mean has stepped up, we could fall back and revisit 40.75, 40.56, kind of where this, I'm assuming, a 4-hour squeeze bottom is. As you can see, we were at the bottom of a daily squeeze. We push up off of that, back to the mean and everything. We have not yet tested the top of that daily squeeze, but it is in play even today. There we go. So, today, this week, let's see what happens. But if we can continue to hold 4101, continue to hold 4136, we can head higher to take out 4165 again. Get up to 4183, the next key level that we rejected. All in a bid to get back to 4200, this daily squeeze top, which now the top of the daily squeeze top is aligning with the daily 50. So we've got our targets to the upside, targets to the downside. Should we lose the daily 21, we can very easily slip back to the daily 15. But just like with Friday, we had a big gap down, a little attempt to fill, and then we just kind of sat, right? It was a very boring Friday. Now, we are having a decent sized gap up. We could have a little dip to fill the gap, go up just a little bit, and bounce around these levels, much like we did. So kind of the same thing in reverse. So be prepared for that today as well. Moving on, NQ. Very similar scenario. Got up, held the 21, held the 21, yada yada. On Friday, did actually get down low enough to hit the 21 and the daily 8. Hopefully you guys can see how they create a zone together, that we hit that zone in reverse. We like to try to refer to the daily moving averages as liquidity levels. So there's a whole lot of liquidity, a lot of big money, institutional buying or selling at the daily means. So this kind of tapping and holding is a good sign for further upside now that we are above the daily 21. And it's all in a bid or a mission to get back to the daily 50, which a lot of these things have not seen in quite some time. Come on, there we go. So pretty simple thesis. We are, just like we were at the bottom of some daily squeezes when we fired a 4-hour up, now we are at the top of a daily squeeze with a 4-hour. So we can use the 4-hour squeeze as a gauge while we're at the top of this daily squeeze. As long as we can continue to stay above the means and push against the tops of these squeezes, they can fire up. We could get back above 13,000, like I said, in a bid to get back to the daily 50. So today, let's see if this overnight trend line can hold from the lows. If we have a little gap or a little dip to try to fill the gap somewhat. Let's see if the overnight trend line can hold and carry us higher through this 12,800 in an effort to get back up to psychological 13,000, where the first Keltner sits right at the top of this daily squeeze. Let's see if we can get this continuation. If we break that little trend line from pre-market overnight, we can come back to fill the gap in the daily 21. Should we slip that, bottom of the 4-hour squeeze, maybe even the daily 15 as a potential. The ruddy, getting up close to its daily 50 already, and kind of pinned between all the daily moving averages, right? So let's see if the ruddy, which is now back above 19,000, that's my big line in the sand, that we're ready, small cap wise, to start being bullish. Let's see, just like NQ, if the overnight trend line can hold us up. If we go back to fill a little bit, watch this pre-market low, and the overnight low is basically back at filling the gap. If Ready can just stay above 1900 and keep on trucking, get through the daily 50 and to the squeeze stop, that could actually happen pretty quickly. And it might give us an indication on the indices. Once we get to the daily 50, can we get above and use it as support, or is it just going to be the next rejection point? YM. Whoop, I'm clicking on Ready. No wonder it's not changing. YM. Let's see. Holding this trend line from the last couple of weeks lows at the same time that it's bouncing at the daily 21, daily 8 last week, right? YM also very close to its daily 50, did not quite get there last week, so between YM and the Ready, we will have our first indices arriving at the daily 50 to give us a gauge of what we can expect for ES and NQ. So let's see if I'm going to leave this trend line, even though we did break through it twice. We're back above it and kind of bouncing at it, so it could be an early warning sign if we start to lose that trend line that we might be going back to fill the gap. Watch this pre-market level and the second trend line from lows from the last couple of weeks. And just like everything else, we're coming up to the top of a daily squeeze with a 4-hour squeeze as a gauge. And as you can see, the daily 21 rests at the bottom of this 4-hour squeeze. So if everything looks weak on this gap up and we start to go fill the gap, we could easily get to the bottom of the 4-hour squeeze today to test the 21 on YM. But if these trend lines can hold, pre-market low can hold right back at that 33,000 big psychological level, we can truck on up, test this daily 50, and try to get to that 33,500 psychological level where this daily squeeze kind of sits. But notice it is a low compression, so it could be easier to push through. And real quick before we depart from the daily means, I did want to take a quick look at ES. If you guys remember, I did a Sunday night prep a couple of weeks ago, or maybe it was last week, where I talked about moving averages on lower time frames. I know we use the daily moving averages a lot, but the lower time frame averages can help gauge trend, help gauge continuation of trend, change of trend, all of that. So it's always worth checking in on our lower time frames. We always check the daily, but now let's look at the 4-hour just to show. After we hit those lows and started making our way back above the daily mean, all of the 4-hour means flip to bullish. So now we are stacked bullish. This white one is the 8 or the 9, pretty much the same. The red is the 21, and the blue is the 45. So, kind of like 21 times 2, it's not quite 45, but we find statistically that the 45 is a good standard deviation of the 21 when you're using exponentials. Probably more detail than we need to go into, but basically, looking at our 4-hour moving averages in our 4-hour structure, we've got a wedge, we've got a bull flag. As long as we hold these moving averages, this flag is a good sign to fire up. If we start to lose that 45 that we've bounced at, we start to lose that 45, we run the risk of firing this wedge right back down. Understanding that we do have some other support should we slip outside. But ultimately, we held all last week. So, still leaning to the upside as long as we are above the 4-hour 21, the 4-hour 45. The 8, every time the 8 came back to test the 21, we got a nice pop. We're back to test the 21, the 8 is tapping the 21, nice pop. Let's see if that continues. Should that 8 start to cross over the 21, we are most likely going to be already price action wise below the 21, the red line, and headed to test the blue again. Now that 45 is above the 4101. So basically, giving out 4101 would mean giving out this 45 that we have bounced at and held us up in this bull flag. So, very key level this week, 4101. Should that start to give out, we should see a revisit of these key levels, 4056, 4100, yada yada. But if we can stay above 4101, the party to the upside continues. So just keep that in mind, and something we'll check in on, constantly, but not in every prep necessarily. So just one point I wanted to make before we move on. Apple. Apple, here's a great example of when these squeezes are very high compression. When they're low, they're easy to push through. When they're high, we tend to just stay in them. And then gaps and slips outside of the range will open them up. So now they're getting open, low compression, easier to push through. I said on Friday, Apple is going to be a great gauge. We need to stay above 147.5 and push off of it to get back going. The exact opposite of that happened. We actually slipped before open below it, and it was resistance. Not only once, but twice on these 30-minute candles. Just for the sake of argument, let's drop down and see what that looks like intraday, right? So on Friday, we push up off of this blue line, which is the daily 8, to 147.5. And big rejection. We try one more time. Basically tapping it and rejection. That's your key sign on Friday that we're not going higher. And we should expect this downside. And I believe if you go back and watch prep, I said if we give out 147.5, we're pretty much going straight down to 144.42. And in fact, I remember looking at it. The high of this candle was 2 cents off from 147.5. And if you look, the low, 46, was 4 cents off from my key levels. So that was the gauge on Friday that not only told us down, but also now we're done with down, and it's just going to do this annoying chop, right? So today on Apple, we're pulling up to 147.5. If we're going to get a gap fill, it will stay beneath it and reject it yet again and go back for a potential gap fill. Understanding we have a little bit of support on my little trail tool that I like to use to gauge trend intraday. So right now, we've slipped below the 3. Just basically saying, watch these key prices. If we start to go back to fill the gap or have a little dip at open, looking for these to hold so that we can get up to test 147.5 during the cash session. I would like to see us push right through it, come back, hold it, and then take off higher. The longer we stay below 147.5 or reject it a couple of times during the cash session, we'll go back to fill the gap. And then we'll be looking to, for this higher time frame squeeze to hold what I assume is probably a 4-hour. Yeah. So, need to get above 147.5, hold it as support, take on off through this 148 in a bid to get back to 150 and the squeeze top. If we start to lose 147, probably going to go back to fill the gap and slap the squeeze bottom, which would still be setting in a higher low than Friday. AMD. Let's go back to our normal time frame. So AMD arrived at the top of this daily squeeze, and there's a 2-day squeeze just outside of it. Kept pushing against, and now that daily squeeze is about ready to fire. And frankly, we can push right through this 2 hour being low compression and only covering a few points. So let's see. On AMD, with the gap up, it is going to be near last week's highs. So let's see if it wants to, if they just rotate directly into chips. Sorry, let me reposition here. There we go. If they rotate directly into chips, if AMD takes out last week's highs in the first 30 minutes, we could see AMD just go on a tear and rip higher to the daily 200, which is sitting up at 117. Not saying it gets there today, but taking out last week's highs and using them as support can definitely start the journey to get there. Should AMD start to go back to fill the gap and lose this squeeze bottom, which looks like a 1 hour, she will go back to visit the daily moving averages. Most likely the daily 8 for a bounce, unless market is really weak, and then vacuum down to where the daily 21, daily 15, and daily 50 are now all overlapped at 98. So big old magnet below should we start to give out trend lines and squeeze bottom. Amazon. From 24.50 right on down to 123 bucks. Ugh, so sad. Well, they caught up the old chart. Just didn't catch up today's chart. No interest for me right now. Got to see where she settles. There are no beasts numbers because these are all new chains, all new prices. So we'll see where this shit show ends up. Cat. Yeah, talked about whenever cat gets near 200, go long. That thesis has continued to hold true. Keeps on trucking in a bid to get back to 227.92 and 230. Basically just kept pushing against squeeze tops even on Friday. Just hugged the squeeze top, unlike everything else. Sorry, that's Thursday. On Friday, she pushed through squeeze top and stayed at the top, at the highs all day versus everything else that stayed at the lows all day. So wouldn't be surprised maybe if cat does a little dip while other things catch back up. But ultimately, still bullish on this to get up to 230. And those highs from, about a month or so ago, when some of our folks played it up to about 240. So, cat still trucking. Facebook. Fought up to 200, dumped hard off on Friday, now gapping back to the daily moving averages. So, this is going to be a very easy thesis. We need to hold the daily moving averages to head higher, now that we are gapped back to them. Should we start to reject them and go to fill the gap, need those lows to hold and send us higher. Otherwise, this is running the risk of looking like getting below the daily mean and rejecting, which would cause a rollover in Facebook back to this zone around 185, which will, end up pulling the market just a little. So let's see if Facebook can hold these daily moving averages now that it's back above it, push back through 195. That should accelerate it up to 200 and this 4-hour squeeze top. Googly, has the split in mid-July. On Friday, did slip with everything else in tech, but held the daily 21 really well. So, with the gap up, let's see if the market and Google just kind of go. If they go back to fill the gap, looking for Google to hold the 2300 level and at the worst like 2285 to head higher and take out last week's high and a bid to get back to 2400, and the daily 21, which is at 2450, which is now catching up with that daily Keltner. That'd be 2 Keltner up. So let's see, Google been strong and leading. And taking a little break on Friday, we have tapped the daily 21 repeatedly and held. The 8 and the 15 are slowly catching up to the 21, so a good day push, maybe 2, will have those 8 and 15 catching up and crossing the 21. So let's see. I definitely want to see us hold the 21, the 8, which seem to be kind of straddling 2275, and a bid to head higher, get through 2350, 2400, and 2450. GS. Strong drive. Took a break a lot of last week to come back and tap all the daily moving averages. The 21, the 8, and the 50 are all stacked together. So, would not be shocked to see GS as it hits the top of this 30-minute squeeze. Go back and tag all of these, fill the gap, hold trend line, tap 21, and go. Let's see, getting through that 30-minute squeeze top, take it up to the first Keltner up at 326, all in a bid to get back to 330, last week's highs overnight. JPM, after this epic move up, yeah, it's had some okay days. But, let's see, it is now above 130. The 8 has crossed over the 21 and the 50. So it will be the first moving average we will tap if we pull back to fill the gap or test last week's lows. So looking for the 129, this daily 8 to hold these squeeze bottoms to send us higher through last week's highs to get back to 135, 136. Microsoft. Whoops. Sorry about that. I just wanted to check in to see if anyone asked any questions or anything. Nope. Okay, live stream's going good. So, Microsoft. Whole lot of compression going on here. So, most likely they will be rotating into other names. Microsoft will kind of get drug around. Let's see if it can hold the gap. This little wick is foreboding that Microsoft could go back to tap 270 before taking off to these squeeze tops and pushing against them. Need to get through last week's high and continue to push these squeeze tops. Oh, and the daily 50 is pretty close up there at 280. So, if we can hold 270, it's mission 280. All in a bid to get back to 300, where that a daily squeeze is sitting. Nope, 2-day squeeze actually. So that means the daily is right at the 50. So if we can hold 270, get through 280, mission 300. If we start to give out 270, and the daily 15, which is at 265, we're going back to 250. Netflix, now above the daily 21 and above 200. If those as long as those continue to hold, she'll start pushing up. 210, 220. That daily 50 is going to be way on up there at 250, outside of third Keltner, so that's going to take time to get it there. If she starts to lose 200 and 195, we'll be going back. 188. NVIDIA. Very strong on Thursday, and not so much on Friday. But didn't have to tap the daily 8 or 21 that were down below at 183. So, let's see. Now that we're back above 190, which was that last high from Friday. Looking for that to hold. So as long as we can hold 190, we can push back up in a bid to get to 200 through last week's high. If we lose 190, probably going back to test the daily 8 and daily 21. And this tiny sliver of a 4-hour squeeze at 180. QQQ. Always so fun to push off and have an epic day and then go right back. So, as we are, trying to continue this bull run higher, always be ready for those sellers to step in and have an engulfing day that doesn't really send us lower, right? So, QQQ, going to be opening around 310. Definitely want to watch 311 and on a bid to get back to 318 where this daily squeeze top sits. If 310 cannot hold, we will likely go back to fill the gap and this daily 21, daily 8 back at 305. So pretty simple today. On QQQ, no lower time frame squeezes. Let's see, 310 give out, back to 305. 310 holds up to 315. So watch your 315s, watch your 305s. Roku below all the 21 and below all the daily moving averages. Compared to Netflix, looking weaker. So not a big interest for me on Roku. Shop. Made it back to the 21 and tried to, just like everything, looked good on Thursday. We're right back down. So now it's butting up to the daily 8, daily 15. If it can get through those, it could just as quickly as it vacuumed down to them. If it gets through them, it could go up just as easily to the daily 21 back at 385 and a mission to get to 400 and beyond. Should we give out 353, 350? Hopefully you guys are seeing how Friday's low and the overnight low create a nice zone. If those give out, she's going to roll back on over. It's not a lot of interest in snow. Down on earnings and just blah. I'll have interest when she's maybe back over the 21. SPX. Always mark your gaps, folks. Actually, I'm going to mark that high wick since we did try to somewhat fill the gap. Boom. So, being up 46 points, close the we will be tapping this gap fill or opening right about in it. So let's see how it wants to react there. It might open right at it and reject for a second, a little profit taking on the gap up. Ultimately, we need to fill this gap to continue to test last week's high. And on Friday, I tried to mention we are opening in a gap down. We have a gap below that we kept holding. Stuck between two gaps is when we can tend to see a choppy day. As silly as that sounds. A lot of times people are like, oh, we're stuck between two gaps, so we'll probably go down and fill this one, and then go up and fill that one. And no, it's usually just means that we're going to be stuck. So let's see. Little gap up. Going to be running into this one. If it can get through, going to test last week's high. If it can get through, going to 4,200, 4,220, where the daily squeeze top is. If it rejects filling this gap, we can go back to fill this gap up we're having. And if low from Friday and filling the gap can hold, we'll go right back up. So, SPY. Back above 414. 414 is so key. Every time we got through it, it turned to support till it didn't. And then we would reject it, and it would be resistance till we get through it, and it's support, and then we'd fall below it and its rejection. So we're above 414. As long as it holds, we can just keep on trucking up to 418 of 420. If we lose 414, lose it and it becomes resistance right on back to 410 and these daily moving averages. That's what happens when we are range bound, folks. If you understand how the market cycles work, we run up, consolidation, and we can run back or continue the run higher. Square. Well, it's opening back above this 85.23 key level that I have, so as long as that can hold, it can get back to the 21 at 88 and an attempt to get back to last week's highs. But as you can tell, last week's highs were pre-market on Tuesday, and then it just came back to settle at all these daily moving averages. So wouldn't be shocked if Square continues to bounce around these daily moving averages, and once the market starts heading higher, Square will play along. Tesla was strong and looking good last week as far as getting back to the daily 21, holding above 718, which is one of my key levels. But then on Friday, we went back. Did not really give out 700. As far as the tweet from Musk and everything going down, sometimes it's just a reason for them to sell a little to load the next leg up. If it were true panic or, true selling because something he said worried or impacted investors, 700 would have given out and we would have gone back to 667. Or, actually, no, not this one. This one, yeah, 657. But ultimately, 700 held, and now, look, we gap up, and we're above 718. So, as long as 718 can hold, we need it's a mission to get back to 744. We rejected right at the high on Friday, near 744. So, if 718 can hold, it's a mission to get back to 744 and above, 750. All to get back to 780, 800. Oh, don't freeze on me. No, TOS has frozen. There we go, there we go. No, that's not the one I want. So if that 718 can hold 725, that is what sent us up on Thursday. Profit taking, now we're back at it. So if 718, 725 can hold today, we should be able to get back above that 744, 750, and get to the daily 21. Should 725, 718 give out, we'll go back to fill the gap, retest 700. And yeah, we've got some levels below if 700 gives out. And finally, Vixx. Vixx, on Friday, only got up to 26. Notice the progressive lower highs. 28, 27, 26. As it butts up on 24.5, looking for that to give out, to go back and test. Look at this wonderful little zone here. 22.5, 23.30. The daily 200 sits right in between those, right near 23, where this daily squeeze sits and is getting super thin, ready to fire. So this could spell, in fact, it's already saying that the daily squeeze and the 4-hour have fired on Vixx. So this could be very telling. Should these things fire to the downside and we get below 22.5, that means we are moving into a nice bull run. And we could see Vixx go down to test 20. But we will also be getting near the third Keltner, which means we could be getting into the oversold portion of Vixx, which would mean the overbought side of the market. So, very key right now to head higher, have to give out 24.5 and go down to fire these daily squeeze completely and test the 200, which is down at 23. If 24.5 continues to hold today and we get through 26, everything will likely be rolling over to go back and test daily moving averages. So, nice little range today on Vixx. Let's see if it just stays in that range while the market starts to figure itself out as far as holding the gap moving higher. If that's the case, Vixx will fire these lower time frame squeezes down and drop to 23. Otherwise, up to 26 through that market is slipping, and we'll see 27, 28. That's it for today, folks. Hopefully this was helpful. Don't forget to go to the live trading channel to pick up today's Beast tool. The plan for this week is I'm going to update that Beast tool daily instead of dropping a link. So, to help you folks, what you'll need to do is go to Tools and go to the sub-tab of Shared Items. You can see these are all items that I've shared with you guys. When I update them, it will appear down here for you because you can see this is stuff I've published and this is stuff I've received. It should be the same on your side. So I will push updates from my side. You will drop in daily to the Tools, Shared Items tab. You'll likely have to adjust these filters. See, there's all time and there's all kinds of different filters you can have. Just go ahead and put all items, and then there's days, you know, when did I pick this up, yada yada. So you'll download your tool today, right? And if you have it set to all items in last 7 days, when you download it today, it should appear in this list. And then as I update it, you see this column that says updates. It will have a little button that says update available. You'll just click that, it'll update it, so you don't have to download a new tool and put it on every chart. The idea is I can put out one tool per week, most likely per ticker, but for this week we'll just stick with one tool. And then every day all you should have to do is come in and hit update, and wherever you have put it on a chart, it will be ready to go. So we're going to do this week, and I'm giving you this little explanation to show you where to find it. And I'll probably put together another video, short video for everyone, just to show how to do those steps. We'll use Richie as a guinea pig, have him download this week's tool, and go in and update it in a video just to show you guys it is possible, because this will make things a lot easier so that you don't have to go find a link or multiple links per day to download and then reapply to all your charts. Instead, at the beginning of the week, you can pick up your links, apply them to the appropriate charts, and throughout the week, just keep hitting update. So, keep that in mind for this week. Hopefully this prep was helpful for all of you guys. We'll see you in chat today. Good luck. And remember, no beast, no feast. If you're new to Predict Trades, please check out our website. There is a link to come join our Discord server for free, so you can start to get exposed to what this system has to offer. Thanks for tuning in, folks. Have a good day.